You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 19th day of December, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael comes on in a little bit, he'll walk you through step by step how to take the trial. We'll get you indicators indicating today. Your trial will officially start tomorrow. That's a Friday. And we got holidays coming, and don't worry, you'll get 5 consecutive trading days. That's just how we roll. Okay? Doesn't matter what day of the week or weekend or hour of the day you sign up for the trial. Once we have your indicators up and running, then you'll get 5 consecutive trading days. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break, and we come back at noon for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the form. What will happen is, going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. All you have to do is click the link in the email at 12 noon Eastern, and it will automatically log you into our platform. Now, the benefit of that is you have access to the question box, so you can ask questions and participate in the discussion. There will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. You can actually see how we've evolved over the years, thanks to the power of YouTube. You can scroll back 6 days, 6 weeks, 6 months, 6 years. Of course, you're not going to watch them all, but if you want to see how we've evolved, you can certainly take a look. Over 2,700 daily episodes. The schedule for the afternoon broadcast: our daily devotional, word of prayer, some news, recap of the Logic 247 alerts, the concierge trade alerts. Then Michael will join us about 50 minutes in, give us a recap of what happened in the live training room today. Then we'll do some live trading on the TradingView platform for about a half an hour. And then I'll wrap things up with our good word for the day. So, let's get to it. The topic of our devotional that we're in right now, day 3 of 12, strengthening your faith with the heavenly gifts. Today's scripture is Luke 11, verses 10 through 13. I'm going to share it with you from the Message translation. Don't bargain with God, be direct. Ask for what you need. This is not a cat and mouse hide and seek game we're in. If your little boy asks for a serving of fish, do you scare him with a live snake on his plate? If your little girl asks for an egg, do you trick her with a spider? As bad as you are, you wouldn't think of doing such a thing. You're at least decent to your own children. And don't you think the Father who conceived you in love will give the Holy Spirit when you ask Him? Again, that's Luke 11, 10 through 13. So, these gifts, these spiritual gifts, these heavenly gifts, you got to ask for them. Paul encourages you to desire the best gifts. He urges you to ask for the gifts of the Spirit with confidence, knowing that God is faithful and will keep His promises. When you step out in faith and ask for the power of the Holy Spirit, you open the door to something supernatural in your life, allowing God to work in you and through you to make a difference around you. Asking for the gifts of the Spirit is not an act of presumption, but of humility. It means recognizing that you need God's strength and guidance to do His will. Your prayer then becomes a sign of trust. Pray this simple prayer. Lord, I desire the gifts of your Spirit. I ask in faith that you will fill me with your power and give me wisdom and discernment to live according to your will. I believe that you are faithful and that you will answer my prayer. Thank you for your love and guidance. Amen. So ask with faith and openness, knowing that God is ready to give you everything you need to live your calling to the fullest. Let's pray. Heavenly Father, we thank you for being a loving and generous God. You invite us to ask, seek, and knock, promising that you will answer according to your perfect will. Teach us to trust in your goodness and to come to you with hearts full of faith. Fill us with your Holy Spirit, guiding us in wisdom, love, and truth. May we always seek your presence and rely on your grace. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Thursday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices. The Dow is up 198 points. The Nasdaq is up 130. S&P 500 is up 31. The Russell 2000 is up 2. Now, considering what happened yesterday, that's pretty good. There's no movers or shakers in the bunch, but Jerome really did a number yesterday. And I warned about it on Monday. I think it was Monday that I put a post in the discussion group. It said, if you can't remember the last time the market got really hammered, you better get ready for a hangover. Well, it got hammered yesterday, and today's the hangover. We'll see how long it lasts. In the commodity basket, crude oil down 48 cents, trading 70.10 last. Gold down $47.80, trading 26.0550 last. That's a drop of almost 2%. Silver down $1.49, trading 29.25 last. That's a drop of basically 5%, or $7,500 per contract traded. That's on top of what it fell yesterday. In the Asian markets at the close, the Nikkei fell 268 points. Shanghai dropped 12. The Hang Seng fell 112. And in the European markets at the close, FTSE down 93, a little over 1%. The DAX down 243, 1.25%. And the CAC down 90, also 1.25%. So we had a red day in Asia. It was a red day for the UK. So far, it's a green Radio Thursday here in the US of A. But when I see that Russell up only 2 points, I'm a little concerned about the whole pack. But they are all four green at the moment, and we do like to see them the same color. You get better follow through on your trades. Let's look at the news. The U.S. Supreme Court has agreed to hear TikTok's challenge to a federal law banning the video sharing app unless its U.S. operations separate from Chinese parent company ByteDance. Arguments are set for January 10th, 9 days before the law takes effect. The High Court will review a lower court ruling upholding the legislation over national security concerns and rejecting TikTok's argument that it violated the First Amendment. Congress enacted the measure in April over concern from U.S. officials that China could access the personal data of Americans using the app, including browsing history, location, and biometrics. TikTok, which became available in the U.S. in 2018, boasts roughly 170 million active U.S. users. ByteDance said it won't sell its U.S. operations. If banned, federal law will prevent app stores from letting users download or update TikTok, and internet hosting services won't be able to support it. While using TikTok won't be illegal, over time it'll become inoperable. Federal Reserve Chairman Jerome Powell announced a 1/4 percentage point cut in the benchmark rates yesterday, bringing the range to between 4.25% and 4.5%. We talked about this every day this week. I think that 1/4 percent cut was baked into the cake. No one was too worried about that. The concern was what Jerome Powell's plans were for 2025. Yesterday's announcement marks the third and final rate cut of 2024, following a 1/2 point cut in September and a 1/4 point cut last month. since a hiring slowdown in the early fall. The job market appears to have stabilized, reducing the case for aggressive cuts. Inflation has also proved stubborn, with consumer prices up 2.7% year over year last month, above the Fed's 2% target. Another reason the central bank appears positioned to slow its pace of interest rate cuts. U.S. stock markets saw steep drops. The S&P fell 3%, the Dow fell 2.6%, the Nasdaq dropped 3.6%. The Dow experienced its first 10-day losing streak since 1974. Wow. All right, government shutdown. Is it going to happen? Washington could be barreling towards yet another spending crisis, but the initial reaction from economic watchers was to focus on the notion that perhaps not all self-inflicted wounds are equal. The rising odds of a shutdown came after a deal to avert a government stoppage fell apart dramatically Wednesday afternoon amid opposition from Elon Musk, followed by President-elect Donald Trump. The revolt led House Speaker Mike Johnson to pull back on a deal he had negotiated with Democrats. Lawmakers are now starting anew, less than 48 hours from when a shutdown would begin. This bill had so much pork in it, unbelievable. A shutdown would have varied economic effects and will definitely be taken note of by rating agencies looking at U.S. creditworthiness. But analysts late Wednesday and early today focused on how the damage could be limited if it comes to pass at all. While the latest developments raise the odds of a government shutdown, a protracted shutdown looks unlikely in our view, according to Goldman Sachs. We do not expect a near-term increase in the debt limit, the analyst wrote, referring to Trump's late demand to also address America's borrowing limit this week. Surprisingly, existing home sales in the U.S. topped a rate of 4 million in November for the first time in 6 months, as house hunters begrudgingly accept mortgage rates above 6%. Contract closings increased 4.8% to an annualized rate of 4.15 million in November, the most since March, according to data released today by the National Association of Realtors, that beat the median estimate of economists surveyed by Bloomberg, who expected a rate of 4.09 million. Apple has finally added ChatGPT to the iPhone, the iPad, and macOS. The latest updates include a raft of long-awaited capabilities, including ChatGPT integration and Apple's visual intelligence, which allows you to get information about the world around you using your iPhone's camera. You can point the camera at something and go, "What is that?" And it'll do its best to tell you. Available via iOS 18.2, iPadOS 18.2, and macOS 15.2. The upgrades are part of Apple's effort to goose iPhone, iPad, and Mac sales and compete with Android rivals in the US like Samsung, as well as those in China. The editor of this article said, "I've been using iOS 18.2 for a few weeks now, and the update certainly delivers on a number of big promises, including making accessing ChatGPT far easier than using an app and providing new ways of searching for things by pointing your phone's camera at an object and asking a question about it. But it's difficult to tell if the latest batch of AI services is enough to get consumers to pony up for the latest iPhone, iPad, or Mac. Now, another article on the Fed. Fed Chair Jerome Powell offered what was perhaps a tell Wednesday on how top of mind the economic policies of President-elect Donald Trump are for monetary policy in 2025. The moment came about 15 minutes into his press conference with reporters when he was asked about September 2018 Teal Book simulations from the central bank on tariffs. I happen to have brought them with me here today, Powell offered of the long-ago study, which discussed the impact of tariffs during Trump 1.0 on prices and whether it was possible to look through their effects. They're a good starting point, Powell added, of the 6-year-old analysis, calling the questions the right ones to ask. The moment was emblematic of Powell's current approach of preparing for Trump's policies, but not changing courses just yet. For now, Powell and his colleagues are in a split vote to reduce the central bank's benchmark interest rate by 25 basis points to a new range of 4.25% to 4.5%, initiating its third consecutive rate cut of 2024, despite signs that inflation isn't entirely going away. You know, Jerome may not have a job after January 20th. Now, Jerome claims that the president can't fire him. I think the entire Federal Reserve should be done away with. It's the biggest single scam ever perpetrated on the American people in the history of our country. If you have not read The Creature from Jekyll Island, you better, okay? This Federal Reserve has got us $36 trillion in debt. Thomas Jefferson warned when they were signing the Constitution. He warned, if you ever want to destroy America, just create a central bank. Well, it's amazing after all these years since that book was written, The Creature from Jekyll Island, that we're even still standing. They print the money, and so many people, in fact most people, not people that listen to this program, but ordinary people, they think the Federal Reserve is part of the federal government. Well, is Federal Express? No. Neither is the Federal Reserve. It's a criminal cabal. It's a privately held corporation by some very rich names. And they print the money and loan it to the American people at a very nice interest rate. The current interest payments on our $36 trillion of debt are larger than our defense budget. Now somebody better fix something quick, or we're gonna be looking like Brazil. As the currency craters in Brazil, thrusting the country's markets into the international spotlight for the first time in years, a grim reality is setting in for top economic aides to President Luiz Inácio Lula da Silva. They are, they fear, powerless to do much to stop the panic. Lula, convalescing at his home in Sao Paulo after back-to-back emergency brain surgeries, has no interest in adding to an austerity package that could, if executed boldly enough, calm investors' worries about soaring debt and stem the capital flight that has sent the currency to record lows. Well, there it is. Cat's out of the bag. Logic 247, our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver, bonds. We're in week 333 of Logic 247. And over those 333 weeks, we've issued over 18,700 individual handcrafted alerts. Every one of them has an entry price, an initial target, sometimes a second, a third, a fourth target, and then a final trade to target. We've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap this morning at 6:30 a.m. Eastern. So some things have changed since then, and I've added some additional alerts since then. So she will get us all caught up this afternoon prior to the members-only workshop at 8 p.m. Eastern. At the time she did the recap this morning, so far this week since the markets opened Sunday night at 6 p.m. Eastern, we had issued a total of 41 alerts, one never triggered. We were still waiting on the outcome of 4. That gave us 36 actionable alerts, of which 2, or 6%, would have been stopped out, again based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, the real purpose of the logic alerts is to help you learn how to read a chart. If you're going to trade for a living, you need to be able to look at a chart of any market in any time frame and instinctively know what the next high probability move is. Just got to learn to read the chart. And our set of humble indicators does make that a little bit simpler. So if you're not using the logic alerts in the right way, you should start while you have the chance. Long before there was a Logic 247, our original alert service, the concierge trade alerts, now the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We got traders around the globe. Their day session is our night session and vice versa. But the CTAs don't come out around the clock. They're published as a static report shortly before the Globex open. Used to be shortly after, and I can't promise that I'll always be able to get them out 5 minutes before the open. But I have managed to for the last few days. There will be days when life gets in the way and they'll come out later. What I've agreed to do is on the days I'm going to publish 5 minutes before the open so everyone can get ready, is I'll post in the discussion group and the trial discussion group. CTAs will come out at 5:55 p.m. Eastern today. The Globex session starts at 6 p.m. Eastern. Now, if you're a member or trial member, you should read this. Make sure you understand it. If you don't, ask. I'll explain it. Every one of our members and trial members had every one of these targets last night at 5:55. ES, the S&P 500, E-mini, the Dow, the Russell, crude oil, NASDAQ, gold, silver, bonds. Now, I published for the F contract on crude. I should have rolled crude to the G contract Sunday night, but I failed to. I was busy rolling other stuff and somehow crude got overlooked. So tonight when they come out, whatever time they come out, it'll be GCLG 25. Okay? All right. With that, let's take a peek at the chart. Now, when I wrote that piece early this week and said, if you can't remember the last time the market got hammered, I went on to say that below us we have two bullish crosses, here and here. I said if the market does begin to fall, a great stopping point would be first this bullish cross and this bullish cross. A bullish cross is simply when the blue line gets above the green line and leads to an extended move. The first time price revisits that area will almost always be good support, and didn't disappoint. This was the fall yesterday. Thanks, Jerome. Now, the market tried to get back what it lost yesterday, and it did a pretty good job until this. Not so pretty, huh? Now, the green line is called the BBC. It stands for Bull Bear Cross. When price crosses above the green line, we expect higher prices. When price crosses below the green line, we expect lower prices. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Now, not every pullback holds, but the pullback holds more often than it doesn't. As you can see, it held all through here, 4 or 5 days, held here, but then red and falling took it down below the BBC. Then we got back above the BBC and the pullback held 1, 2, 3, 4, 5 days in a row. We've been consolidating sideways. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days until yesterday. And then the market got hammered. Now we're still well above the low of yesterday, but we're real close to where the market closed yesterday. We didn't close on the low of the day, so that in and of itself was promising. Markets opened last night and took us all the way up to the 24% fib extension. And then, I guess they just lost hope. And down we go. Whether you trade futures, stocks, crypto, Forex, ETFs, you should spend 2 minutes with the daily chart before you start trading. Why? Institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Well, it has everything to do with account size. The institutional traders have massive accounts and they trade in an incredible size. They move price, we're the liquidity. But that's okay. We can still make money. So, if you'll spend 2 minutes with the daily chart of whatever it is you trade, not only can you see what the deep pockets are doing, because let's face it, if you do what they do, Makes it pretty simple to get your goal for the day. But you're also able to identify where major resistance is, where major support is. You notice price not only came down and closed the session right at that bullish cross, but look where the low of the day was. It was at the lowest fib extension. The fib extension goes from this low to this high to this low, and that projects all of this. Okay. Now, we've been under pressure ever since blue and climbing turned to red and falling. And as it kept pinching down, I said, guys, I said it several times this week. I think, now the pullback holds more often than not. I said, but I think this time we're going to trade through. Now, would that have happened without the Fed announcement yesterday? I don't know. I don't have crystal balls. I just knew the market looked tired, and based on our humble set of indicators, with this much red and falling, it seemed inevitable to me, with or without Jerome. And we just whacked right through that trend line. I'm going to leave it there, though, because it connects this low back here to this low. And so if prices do start to rally, okay, then the underside of that trend line could become important. So no harm in leaving it there. All trades are created on the 30-minute chart. Both the logic, 247, and the concierge trade alerts. These other lines you see, of course, are the weekly trading zones. They're published every Monday morning, 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Even when we have an unusual day like yesterday, where we completely blew out the lowest weekly trading zone here. These were the CTAs published last night. Now, again, the ES tried to recover some of what was lost yesterday from here all the way to here. But now we got red and falling, prices below the BBC. If we take out this low right here, then we're probably going to drop to the short target at 59.09. Don't think there's any risk in us hitting that long target. Price open, rolled sideways, but it had blue and climbing, so that pushed it up to the BBC. Once we got above the BBC, there was room to get your goal for the day. And this one candle here, it opened at 59.82 and ran up to 59.90. That's 8 points in that one candle, that one green candle. You're above the BBC, you've got blue and climbing, you go long. I mean, it's that simple. So here on the downside, you got red and falling overhead. This candle opened at 59.71 and dropped to 59.51. That's 20 points in that candle. It only takes 2 points to get your goal for the day. Okay, onto the Dow. Same horror story. And basically the same kind of movement. We had blue and climbing. It walked us above the BBC. This candle opened at 43,006 and ran up to 43,074. So that's about 70 points in that candle. On the Dow, you need 20 points to get your go for the day. We got red and falling overhead. We're below the BBC. So if we take out this low right here, if we take that out, we will probably hit the short target today. Now we're below the BBC, but we're printing a green candle, so you just got to be patient. You want to let price drop to at least 42,775, and then a drop to the short target would be handsome. Russell. Now the vertical lines, of course, separate today, Thursday, from yesterday, Wednesday. If you scroll back, you got Tuesday. You see, under normal market conditions, when price drops to a weekly zone, we expect support. When it rallies up to a zone, we expect resistance, until proven otherwise. Okay. And we were in the process of overcoming this zone yesterday when the Fed announcement came out, and it's pretty ugly, I must say. Now on the Russell, we're almost back to the short target. We need to take out, what's the low of this candle? 22.43. And what's this low? 2243.7. So if we got down to 2241, you could pick up 3 points on the way to the short target. Now, interestingly enough, the Russell, as it got above the BBC, it made a run all the way to the lowest weekly trading zone, and it became resistance. When price moves up to a zone, even if you're below the lowest weekly zone as we are here, that's where the market found resistance. And these are zones that were published Monday morning at 6:15 a.m. Eastern. Even when there's a blowout like this and we're below the weekly zone. Now, I'll say this. By close of business on Friday, we do expect price to be at or above the lowest weekly zone. 15 years of history has taught us that. Tomorrow's Friday, so it would take some serious buying to get us back up there. So this week it may not happen. Doesn't mean we'll change anything. Now in that wicked sell-off yesterday on the NQ, where did we find support? At the lowest weekly zone. We spiked it, but we closed right at it. That little tiny speck behind the line that separates the days. So last night we bebopped along. Only 3 things happen when price encounters a zone. 70% of the times consolidation, 20% of the time rejection, 10% of the time the slice. That of course is under normal market conditions. But even here, you see where price sliced through that zone? And then it retraced back up to the zone it sliced through and continued in the direction of the slice. At that point, there was so much momentum. You can see here that wick, it was green. It was trying to pull back to the zone it sliced through. There was just too much pressure. So we did get above. Okay. Plenty of room to get your goal for the day up here. And now we're back below the BBC. We got red and falling overhead. and we're sitting right on top of the lowest weekly zone. Now, I have rolled this to the G contract. It should have been rolled over the weekend. My mistake, my bad. Michael's not trading crude in the live training room in the morning, so that's why it probably never came up. These targets that I published, obviously, we did almost hit that long target, but these targets were published for the F contract. So there's really no relevance in this at all. But the weekly trading zones still hold relevance. This is the lowest weekly zone this week for crude, 69.10. No, I'm sorry. The lowest weekly zone for crude is down at 66.90. So we very well could find support here and turn back up, or we still got plenty of room to drop. And dropping is, right now we're getting a bearish cross. Red line getting below the green line. Now this high right here, see the bearish cross? Red line got below the green line, led to an extended move. The first time price revisited that area. What did we find? Good resistance. That's real reliable. The first time back up will almost always be good resistance. Sent price all the way back to the BBC. Pull back holds more often than not. And that set us all the way up. In fact, that high is just shy of that high, which is what the target was based on. But again, these were for the F contract. All right, gold. Man, metals have had a very tough go of it. Now, the lowest weekly zone for gold is down here, 25.49/25.50. We opened last night. We ran up to the BBC along with blue and climbing. Okay, blue and climbing's bullish, red and falling's bearish. We got to the zone and the pullback held for quite a few hours. Then we punched through and hit the zone at 26.32/33. Then consolidated for hours, as we do 70% of the time when we encounter a zone. But price dropped right above the low from last night. Now the closing low yesterday is almost that low right there. But notice the step line, the black step line has crossed on the way down. You got price, step line, red and falling. Well, the step line has now crossed to the right side. See the black lines on the left side of red and falling? Now it's on the right side. What does that mean? Price is probably going to retrace back to the BBC. The question then becomes, will it hold or not? If it holds, we'll get another leg to the downside. If it doesn't hold, make sure you are aware that you've got a bearish cross right here at roughly 26.24, and that should be good resistance the first time up if price is able to overcome the BBC. And silver. Last night silver opened and dropped. It didn't drop all the way to the target. It opened at 29.80 and dropped to 29.69. About $500 per contract traded. What was the low again? 68.5. So we missed the target by a point and a half. up to the BBC, consolidation, the pullback held, blue and climbing, turned to red and falling, and now we've traded through the short target. The step line has crossed, so look for price to make a move back to the BBC. And if it's able to trade through the BBC, you got a bearish cross right here. And that should be good resistance the first time back up. So that's all the markets. This is not looking so good. To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name and your phone number. We're not going to call you. We don't have a phone room or a sales department, but we will send you an email that explains everything you need to know about what becoming a passport holder means. And if you like what you read, there will be a link in that email that you can click, become a passport holder. Valerie will send you lots of information. You'll have access to everything. Okay? 2 hours of live training every day in the live trading room. Private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Whether it's futures, individual stocks, crypto, Forex, ETFs, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. Every Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. And you'll be able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. There's still time to send that email today so you can be in the members-only workshop tonight. Also, you're going to get the golden key that opens all the private channels in Telegram. In fact, one of those channels is the members-only weekly workshop channel, where we record each members-only weekly workshop, and now hundreds of them live in that Telegram channel. Do you need to watch them all? No. All you really need to do is show up every day, ask every question that pops into your head, trade along. It's going to take a little time to get the hang of what we do. You're not going to get rich overnight. You know, if you're joining because you need to pay the mortgage at the end of the month, you should call a rich uncle or something. Okay. You don't start trading live the day you become a passport holder. That's the day that you begin learning the strategy. The 24/20 blueprint says you got to put together 10 consecutive days in a row before you go live. Now, we can't control what you do. It's just good advice. Okay? Once you have 10 consecutive days in a row where you reach your goal in 10 trades or less, then the blueprint will give you the green light to go live with one contract. Now, that first contract is funded with your startup capital, the money you use to open your account. You're going to trade one contract until you increase your account balance by $2,000. Then the blueprint will give you the green light to add a second contract. The beauty of the second contract is it's not funded with your startup capital, it's funded with profit you earned in the market. The blueprint will tell you when it's time for number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when it's time. and you only add with profit you earned in the market. If you have the self-discipline to follow the 24/20 blueprint, it makes it less likely that you'll blow up another account. Not saying you can't, but you will break some rules in the process. Michael's here. He's going to give us a recap of what happened in the live training room. Then we'll do some live trading on TradingView. And then I'll come back and wrap things up with our good word for the day.
All right, here we go.
Okay.
Here we go.
All right, looks good.
All right, I'm ready to go. There. Good afternoon, everyone. Today is Thursday, the 19th day of December, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button, and it's going to bring you to, well, it'll bring you to this registration page right here. On this page, all you ask for is your name, your email, and your phone number. Down here at the bottom, if you have a NinjaTrader, it gives you machine ID. Only if you're going to be using the charts, though. If you're not going to be using the charts, we don't need that machine ID. It's just more work you don't need to do. We do highly recommend that you get TradingView and use the TradingView charts because that's where the primary indicators that we're using are. So to get TradingView, there is a free 30-day trial if you don't have it. But you can go here to mytradingiq.com, click on trading platforms, and just click on this link right here. This one right here. It says TradingView. There's a video you can watch. The video is still good. It's 2 years old, but it's still good. But just click on this link right here, and it'll tell you what to do. Okay, I'll make a new video. We'll get a new video made there pretty soon. That's it. Once you get TradingView, you're gonna have to get real-time data. You can transfer your real-time data from any one of these brokers if you have them. Any one of these brokers. There's a whole bunch of them down here, like 75, 80 of them down there. You can transfer it from any one of those brokers, or you can just pay the $7 a month and get it directly from TradingView. It's up to you. Some people don't like to pay for data in two places, even though it's cheaper to pay for the data than to get the data from TradingView. The spreadsheet. Now I'm gonna update the spreadsheet. I changed it when we started doing divergence trades here to just show what it took to get the goal for the day. And then I did all the divergence trade results down here. I think I'm just gonna put all these back up there so it's better flow and it just makes more sense. I'll still just keep track of getting the goal for the day, doing the ribbon trade. And today again was the first trade. Today on the 19th of December 2024, we took a trade on the Russell, our first trade of the day, 26 ticks we made. That is $130 per contract. Took 5 minutes, one trade, get to $1,560 this morning. Okay, and as far as the 24/20 blueprint goes, so far this year, if you quit trading when you got your goal for the day and you added one contract per month, you'd be averaging $3,270 per hour. All right, you would have only had to work 69.93 hours. Now, it would have been a lot less than that if I wasn't trading a bunch of contracts in here, because there was a lot of slippage when I was trading a bunch of contracts. Now that I got it, now it's down to 12, so there's still slippage now, but not as much as it was when I was trading 20. But down here, the results down here, once we did the divergence trades today, we're up 330 ticks on the NQ alone. We're up 26 ticks on the Russell. We're -5 on gold and +25 on the ES. So we're up $2,042 overall on the morning session. Okay, $2,042 with one contract, over 25 trades this morning. See, this doesn't make any sense to have all this down here, but the total on the month doing the divergence trades with one contract is $6,195. So we're averaging $1,548. This is not the right number. 1, 2, 3, 4, 5, and somehow I skipped a day there, the 19th. I'll have to go back and fix that because I have the results for the 19th right here. On the 19th, this is the 19th. This is the 19th. So all these are the results for today. Okay, so that is the right number. 1, 2, 3, 4, 5, 6 days, 6 business days. So this would be a 6 right here. And that'll bring our average to $1,032 a day, just taking the divergence trades. Okay. Those of you guys who don't know what the divergence trade's on, you're about to find out. Okay. So here, our first trade of the day was here on the Russell. We only had a couple of trades on the Russell anyway. we had very first one. We'll get to that. Here it was. I guess we had a few trades on the Russell. Hey, we took some profit there, and I didn't take credit for that. This is where we got the goal for the day on this one right here. We picked up 26 ticks. Is that right? Yeah, 26 ticks on the very first trade here on the Russell. Then we had another one here that we apparently took some profit on that I didn't write down. And we had one right here that we had to break even on. Now, we didn't have a ton of trades on the Russell compared to like the NQ. The NQ just was even trade after trade after trade today. But for the Russell today, we had right here was a trade. Right there was a trade. I started to highlight the trades as they were triggering. Now in here, it would be the bar that this line is on. That was a trade, so you would have bought right there at the open. You would have bought right here at the open. Going through, you would have sold right here at the open. You would have bought right there at the open. You would have sold right here at the open. You would have bought right here at the open. And going through more and more, you would have bought right here at the open. That would have stopped you out. You would have sold right here at the open. You would have gotten it right back. Bought right here at the open, gotten it back again. We took this trade in with a break even on it. Over here, I didn't get this one, but you would have bought right here at the open of this bar, actually. You would have bought right there. That would have stopped you out. The next one would have been right here. That would have stopped you out twice in a row. You would have bought right here at the open. That would have gotten some of that, half of that back. And you could have sold right here at the open, would have gotten the rest of it back. Sold right here at the open, would have gotten more. And bought right here at the open, would have gotten something there. And this is just the Russell today. Right, the NQ had way more trades than the Russell. The Russell had a ton of trades, and just going through, you all see this, right? You all see what I'm pointing at? When the blue line leads into the overbought, the oversold, you buy the open of the next bar or sell the open of the next bar. If it's in the overbought, you sell the open of the next bar. If it's in the oversold, if it leads into the oversold, you buy the open of the next bar right here. Buy the open of it, sell the open of it, buy the open of it. And a lot of times it's going to go right back and forth. Like right here, you'd sell the open of that, then you buy the open of that. You buy the open of that, and we didn't get a sell right away in there. That was it. There was just a ton of opportunity, and that was just the Russell. Okay, that's where we got the gold for the day. On the gold, we had a few trades on the gold here today, and we ended up with -5 on the gold overall. Okay, we had our stop out right here. Remember, at -15 on that one. Then we picked up 10 ticks on this one, and we had a break even on that. You can see there was another trade right here that was a profitable trade. Another trade right here that was a profitable trade. And if we just buzz right through them all, there was that one that we took. This one right here that we missed, it would have been a profitable trade. This one right here that we took, that ended up being a break even. This one right here that we missed, that would have been a profitable trade. This one right here that we missed would have been a profitable trade. This one right here that we missed, profit. This one right here, depends where you got in, but if you got in right there, it would have stopped you out. This one right here would have been profit. Stop out, profit, profit, profit. So there's just a ton of opportunity using this. You know, I'll go through some of the NQ trades and the ES today. We had times it's 104, so we have plenty of time. I want to actually take some of these trades with you though. Okay, the market seemed like they probably slowed down, but we took a bunch of ES trades today, as you can see. And we ended up with +25 on the ES. I guess that was our high for the day, wasn't it? Yeah, we had a couple of stop outs in there too on the ES. There's one of them. But we started out, I think we started out with a stop out. Yeah, we started out with a stop out, -10 ticks there. Then there were some trades all through here that I didn't get. Right here was one that I missed, would have been profitable. Right here was another one that I missed that would have stopped me out. Right here was one that I missed that would have been profitable. Right here was one that I missed that would have been profitable, 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 profitable. That would have been pretty close to a stop out, but I think it would have been profitable overall. This would have been profitable right there. The open of this bar would have been profitable right there. The open of this bar, you would have been selling. That would have been a stop out. This, you could have gotten it right back, gotten it back again. Right here, he would have sold the open of that bar. That would have worked out. You would have bought the open of this bar, would have worked out. I missed this one right here, but we did get profit on that, and that. The ones that we did take, we were minus 10. Then we took 11 ticks profit, I think, on this one. That got us to +1. Then we got 8 ticks profit on that to get us to +18. Then we had 3 ticks profit to get us to +21. Then 2 ticks profit to get us to +23. Then we stopped out, and this was a mistake. I should have had my stop at break even on that, and I ended up stopping out. That put us down to 13. And then over here, we picked up 12 ticks profit on this to get us up to 25. Now there were some more trades in through here. You see that one and that one right there. There was also a trade right here. You would have sold the open of this bar, would have been a nice profit right there. You would have sold the open of this bar, that would have stopped you out right there. You would have bought the open of this bar, would have been a nice profit right there. Bought the open of this bar, that would have eventually given you a break even right there. We already showed that one. Would have bought the open of that bar, would have been a nice profit on that one. Sold the open of this bar right there. Bought the open of this bar, bought the open of this bar, sold the open of that bar, bought the open of this bar. All of those would have been profitable trades, every one of those. You guys following this? There's just a ton of them. All right. Now, so we ended up on the ES, we ended up with +25 ticks. I'm not going to go through every single one of them, but we ended up with +25 ticks. All right. So now let's look at the NQ. Now, I highlighted a bunch of trades here on the NQ, not looking at all the ones here that happened during the break, but look at all these lines, all those vertical lines that you see. Those are all trades. If you don't see an arrow on it, those are all trades that I missed. Okay, the NQ just gave a ton of trades. And I was up 330 ticks with the ones that I did get. But it was going so fast, it was just knocking out trade after trade after trade after trade. You can see them all in here. There's just a ton of them. Now, I want to take a moment here so that we can just appreciate what we have going on. That was just a thought that I had this morning that I'm going to undo right now. So we can appreciate what we actually have going on here, right? If I go in here and I just get rid of that, and I go in here and I take off the cover and just leave that on. The normal trades that we would do using just the ribbon. Okay, the normal trades that we would do using just the ribbon. And, you know, there was one of the fellows that took the trial this week. He really wanted to have the ribbon, and I had taken the ribbon off because there's so much more opportunity without the ribbon. And apparently that annoyed him because he didn't come back to the trial, but it is what it is. You know, I'm going to trade what works the best. And the ribbon right here, if you took the ribbon trades, there would have been one right here for some profit. Okay, your next ribbon trade would have been right here for some profit. Your next ribbon trade would have been right here for some profit. So those are all good trades. Every one of those is a good trade. Okay, you wouldn't have had another one until you came out of the overbought right there. It would have been arguable right there, but you would have had a short right there. Okay, maybe for a little bit of profit. And the ribbon got all crunched up. You wouldn't have had anything until you wouldn't have had anything else. Now, those are some trades in the first 20 minutes. That's still some pretty good trading in there. In the first 15 minutes. You would have had another one right here where it came out of the overbought. That probably would have stopped you out. You would have had a short right here. That would have generated some profit. Another short right here. That would have been okay to take. Another one right here would have been okay to take. Probably would have been a break even. Going over here, you would have had a long right here. It came out of the overbought. That would have been okay. Didn't put in a higher swing, so nothing else matters to get a higher swing. You wouldn't have had anything in here until you got to the other direction. You would have had a short right there. That would have either been a break even, or it doesn't look like it pulled back the full 10 ticks. So you might have gotten a break even on that one. Couldn't trade again in that direction, so you get a lower swing. You get a lower swing here. The ribbon's crunched up, so you can do anything in there. So you're not doing anything through any of this until you get all the way over here. And this would have been a stop out. Right here, you got to see all 4 lines in the ribbon, remember. So you didn't see all 4 lines in the ribbon again until all the way over here. Actually, you can just barely see them right there. We would have been desperate for a trade right there, though. But if you took that trade, it looks like it would have given you some profit or maybe a break even. Then right here. It wasn't actually coming out of the overbought. If you took this coming out of the overbought, it would have stopped you out right there, and you wouldn't have taken anything after it. If you took this right here, it's really close to the swing low, so I probably would have skipped that. Looking for more opportunities here. You would have taken this right here, didn't put in a lower swing, probably would have been a break even. Nothing through there. Now in here is where the divergence trade excels. When you're in all this choppy stuff is where it really excels. Where you get a whole bunch of trades where normally you would not have any trades at all. But you can see just using the regular ribbon trades in here for the fellow that wanted to use just the ribbon trades that was on the trial yesterday. It gave plenty of opportunity, right? And here you see all 4 lines in ribbon would have been right there. That would have stopped you out. Right here, it would have been a decent trade right there. You would have got your money back. Right here was another one. You would have gotten your money back again. Right here was another one that would have stopped you out right there, probably to the tick. Might have gotten a break even, but it probably would have stopped you out to the tick. And the ribbon's all crunched up, so no trades. And you get all the way over here. We would have had a trade here. And if you stretch that out, you can see all 4 lines. We had a nice trade right there. Nothing else until here, which would have been okay, but nothing after that. Okay, you probably would have gotten a break even. I would have gotten a break even on that. Right here, you would have had a nice trade. Okay, and then you probably could have taken this trade right here. There's probably four lines visible in there, and that would end up being a break even trade right over here. Okay, so this is the NQ, and that was, I didn't count the number of good trades and number of stop outs. I mean, this setup works. It works well. It doesn't give you a ton of trades. It doesn't trade well in the chop. It stops you. It doesn't trade at all in the chop, really. It stops you from trading in the chop. You usually get a stop out at the beginning of the chop, or you get a break-even trade at the beginning of the chop. And then you'll recognize that it's chop, and it's not going to give you any more trade setups because the ribbon's going to get all crunched up. Okay. So I don't want to go through every single trade and bore you with this, but like right through here, once you had this trade right here that just barely put in a higher swing, you would have taken that. Then you didn't get another trade that came out of the oversold until all the way over here. You wouldn't have had any more trades. So you would have had this one trade right here where the chop began. Now let's just look at this and take this as an example. Okay. The chop began after this trade right here. You would have gotten some profit on that trade, and then the chop began. From there until you got up above this level right here, you were in chop. Right, all that chop right there. You wouldn't have had a single trade in there. Now, to show how the divergence trade is just great in this kind of a situation, put this on, and we'll put on, not that one. We'll come in here and put this on. Okay, and then we'll just get rid of the context for a minute. All right. So coming into this, the blue led into the overbought. So you would have sold right there. The blue led into the oversold right here. Okay, right here, the blue led into the oversold. So you would actually bought right here. So let me just, let me lift this up so I'm not looking at price. Okay. So the first one, it led in right here. So you would have sold right there. All right. It's actually on the line. You would have sold that one. It led in here, so you would have actually bought right here. If it wasn't part of the trade, if it wasn't part of that trade, you would have bought right there. It led in right here, so you would have had another buy right here on this line. That would have been a buy right there. Okay, it led right here, so you would have sold right after that, but we'll just skip the ones that go in together like that. Okay, so you would have had a buy right here on this line. So where that blue line and where that red line is, sorry, the red line right there is already marked. And this one right here would have been a sell. So you would have sold right here. And this one right here would have been a buy again, right in here. Another buy. And this right here would have been another sell right in there. And this right here would have been another buy right in there. Oops, there. And this right here would have been a sell right in there. And this right here would have been another buy right in here. Okay, and that's that chop period, right? If you drag this down, that's that chop period. So the first trade right here, we're on a 31 range. First trade went from all the way up here, 31 ticks and then some. So we've gotten 48 on that. This one right here, if you bought at the open, it would have been buying at the open of this bar. That would have stopped you out for sure. So 48 minus 36 gives you 12. Right here, another 48, that gives you 60. Right here, another 20 or 30. No, that would, if you bought the open of that bar right there, you get another 48. So that gives you 108. Right here, if you sold the open of this bar, another 48. That gives you 156. Right here, if you bought the open of this bar, that would have been 30 anyway. It might have been all 48 right there. I don't know how much further. This is 31 ticks. From here to here is 31. And it's 29.75 up to 37. So there's another 8 points on top of it. So yeah, you definitely would have gotten 48 right there. So you're at 156, I think. Add another 48 onto that. You're at 212, I think. 202 maybe. This right here, you would have sold the open, right? You would have sold the open right here, and that would have stopped you out. It doesn't look like it went enough into profit to bump the stop to break even. So you would have sold the open on this bar, and that would have stopped you out. So minus 36, 212 minus 36 is why do I even try? Let's say 202 minus 36. I think it was 202. We're at 166 ticks after this one. This one right here, you would have bought the open of this bar. So you would have stopped out on that one too. All right, if you bought the open of that bar right there. So minus 36 again equals that. Then sold the open of that bar, but you see it went down 31 ticks before it went up. So you would have sold the open of that bar and it dropped 31 ticks or 30 ticks before it went up. So you would have taken like 10 ticks profit on that. Probably we'll just say 10 or actually 12 because I do things in multiples of 4. And then this one over here, you would have bought the open of this bar. So another 48. 48. Okay, that's 190 ticks. Even with the stop outs. In this period right here, we would not have a single trade using this. The divergence trades excel. They just rock when you're in the chop like that. As a matter of fact, they're better in the chop than they are when you're in a trend. Because with what we do, with what we're looking for profit on a trade, you can get it all within a single bar. You can get your entry and get your profit within a single bar. What was that one doji? On this one right here, all right? That was a short right here. This dropped from the open right here. If you sold the open here at 34.75, it dropped all the way down to 27.75. So it dropped 6 points or 24 ticks. That's more than the goal for the day, right there. More than the goal for the day before it turned back up and went up. So you guys see how you would be able to just take profit on this again and again and again. And I know some of the guys in the room they're really actually killing it with this right now, better than they've ever done. And if you haven't done this yet, if you haven't joined up with us yet, if you haven't taken the trial with us yet, then you are really missing out. Right? There are a lot of people that are doing better than they've ever done with this right now. And this is only going to get better. I'm only going to make it better as we keep going forward. But you're missing out if you're not doing it. You're really not serious about making money trading if you're not joining and trying to do this. All right, so I got 11 minutes left in here. So we can go through some more of the trades here if you want to. These are all the trades that in that whole choppy period right there, we wouldn't have had any using the ribbon. We had all those trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in that one period. What time was that from? 10:44 to 10:50. Is that right? Is that right? 10:50, 10:44. So yeah, it was 6 minutes. Granted, that's a lot of trading in there, and that was, normally it wouldn't be that fast. It'd be much more time than that. Like, it slowed down here this afternoon, I think. So we'll just go to some choppy period in the afternoon, like right through here. Look, this is pretty choppy. We'll just go through this choppy period that we just had. So you would have gone long on the open of this bar right here, the open of that bar, you would have gone long. All right. And you would have gone short on the open of this bar. So that would have stopped you out. So it might not have stopped you out because you would have gone short on the open. It's a 31 tick range bar. You have a 36 tick stop. So you might have gotten break even right over here. If you went short there. If you shorted here at 89.75, it dropped down to 85.75. It was just enough to get your stop to break even. So you had one great trade right here. Again, the goal for the day, 48 ticks. If you got that trade alone, 48 ticks, you got the goal for the day. If you followed up with this one going in the opposite direction, it worked out to be a break even. It went 16 ticks in a profit. So whether you moved your stop to break even or not is on you. This one right here, the next open you would sell right here because the blue led up. So you're selling the next open, right there. The open of this bar was right here at 509, and it dropped down to 505 for 4 points, 16 ticks. Again, enough to get your stop to break even. But even from 509, you would have to go up to 513. Nice, it did go all the way up to 519. Okay, so from 509, you would have had to, no, 513. No, that's not right. You'd have to go 9 ticks. You have to go up to 518. All right, it went up to 517. So even if you didn't get it right here, you would have gotten it right here. All right, this didn't stop you out. If you got in at the entry point and not better, then you still didn't stop out. You would have gotten your profit right back here. Okay. So you had one good trade, one break-even trade, and another good trade that made you suffer a little bit. This one didn't really hit the overbought. If it would have hit the overbought, you would have sold the open of this bar right here, and you would have gotten 48 ticks right there. This one right here, you would have been buying the open of this bar. It's at 31 range bars, so you would have gotten some profit out of that. This one right here, you would be selling the open of this bar. Again, 31 range bars, so you would have gotten some profit out of that. Right here, right now, buying the open of, where's my cue down? Buying the open of this bar right here. Okay, right here, buying the open of this bar. Now that's not working out so well. I actually just did it, and it's not working out so well for me. I almost stopped out. See, I almost stopped out on that. It looks like it's going to stop me out, and it did. So you would have stopped out. Now, I was up 330 ticks until then. But you can see that the trades just trigger again and again and again. Those bars are zipping, so how do you buy and sell the open of the bars? Gordon, you wait till the bar actually opens or closes, and then usually it's going to move in favor of you, like that one right there did for me. Even though I ended up stopping out, it opened and it went more in favor of the trade, of my entry, giving me a better entry point. So you just wait till the bar closes, see where the open is, and usually you're going to be able to get in at a better point. Like right here. I mean, today, I mean, it really was zipping by today. If you were in there this morning, it was going by way too fast. And, I stopped after a while. And I had a little crisis for a little while right in the middle of it all that I had to go deal with. But like almost every one of these trades, they go against you a little bit before they go for you. Like right here, you would have been buying the open of this bar, but it dropped down 4 points before it went up. So you could have gotten an easy entry, better than this entry right here. You could have gotten an entry anywhere down here. It went from 75.50, it drew down to 72.50. So it drew down 3 points for 12 ticks. 12 ticks it drew down before it started to make the move up. So you could have gotten in anywhere right here at the open or better. Okay. And what I do a lot of the time is when I see the open and it starts going better, I just drop an order right here. I just left click right here in the bid. If I'm going long, I just left click in the bid above price, and that's going to give me a limit order at the current bid. Okay. The question was, those bars are zipping by so fast, how do I buy or sell the open of the bars? So that's what I'm answering for you. Okay. The way I have my DOM set up, I can click right here and it's going to give me a limit order right at the bid. I click down here, it's going to give me a limit order right at the ask. Okay, and I'll throw my bracket on for me, and then I can manage the trade. But most of the time, if you go back and look at all these trades, go back to the ones I already marked, so it'll be easier to see. Well, I guess we can look at ones I didn't mark. Right here, you would have been selling. Selling the open of this bar. Look, it drew back that much before it made its move. Right. over here. Well, this one would have stopped the open, so it wouldn't really matter. Actually, no, it wouldn't have. Look, it would have been selling the open of that bar, and it dropped 30 ticks before it moved up. Right here, you would have been buying the open of this bar, and it dropped all the way down here before it moved up. Okay, right here, you would have been, well, if that went into the overbought. If it went into the overbought, you would have been selling the open of this bar, but it moved all the way up there before it moved down. See, most of these things have momentum opposite of the direction you're going to trade. Like right here, you know, the entry point would have been right there. That's the open, but it went all the way down here before it moved up. This one, the entry point would have been right here. This one would have gone down first, and then you would have gotten it. But this one right here, the entry point would have been, I don't know how that ended up working out, if it went down first and then it went up. But something like this, you know, your entry point would have been to sell right there. It moved up a few, and then it moved down. See, so you don't have to have your order waiting there. And, you know, if you get the trade, you get the trade. If you don't get the trade, skip it. And there's going to be another one. You know, there's always going to be another trade. Like all through here, you know, there was one right here. It moved up before it moved down. What would have been this bar? Moved up before it moved down right here. It would have been this bar, moved up a little before it moved down. This one right here, it moved up just a tiny bit before it moved down in the next bar. Just looking at all the shorts right through here. Even the longs through here, you know, the long right here. This one actually would open right there. You had to get right in on that one. But that's not the norm. The norm is that it's going to go against you a little bit before the trade. Like before the trade goes, it's going to go against you a little bit. Okay, before it starts going for you, it's going to go against you a little bit. Right here, you would have gone down a little bit before it moved up, and right here, that one wouldn't have. That's usually the case. Okay, Gordon. So that's what I got. That's what I got. I'm tired, and we have so many meetings to do today. Frederick H, are you in here right now? Fred H, E, F, G, H, I, J, K. No, Fred's not in here. All right. Yeah, Gordon. And it's just so much easier. You know, I don't have to worry about divergence. I don't have to worry about swing highs and swing lows and having it one tick above the swing high or one tick below the swing high, you know, the ambiguity of that. I don't have to worry about any of that. I don't have to care if it's going into chop or if it's coming out of chop. I don't have to care. There's just all the things that we used to worry about. We don't have to worry about it anymore. You know, right now it's just clear cut. Do you have the divergence, and is it coming out of the overbought or oversold? It's really simple. Is the blue leading by itself? If the blue's leading by itself, then you know what to do. Okay, if the blue's not leading by itself, if the black is leading, then move to the next market. Okay, a lot of times when the black's doing it, it'll still work, but we've decided to go with the blue because the blue is usually faster. So the blue is usually going to get there first, and the blue is usually going to be the one that works well for you. I mean, even when the black does it, it still works, but you want to have separation, right? Separation between the two. That's the deal, right? And what do I mean by the divergence? Divergence means, well, look at right here. These have divergence right here. Okay, so because of that divergence, you could have sold the open of this bar, sold the open right there. Now it's already gone 26 into profit, so you can't do it now, but it went from 30.50 all the way down to right there, 24. So it's gone 28 ticks into profit, 26 ticks into profit. So that's all I'm saying. This is divergent right here. Let's see, do we have any divergence on this one? This is divergent right here. Right, this is divergent right now. Now it wasn't divergent when it went into the overbought, so that doesn't really count as anything. But this one right here, this is divergence, separation between the blue and the black. So when you have the separation and the blue either goes into the overbought or goes into the oversold, then you take action. Okay, and we can do this with anything. If we go look at the YM. Now, I haven't touched the YM in a little while because it was giving me a headache. But if you look at the same thing in here, when you have separation right here, see, this is my first time looking at it on the YM, but right here, you get into the overbought, you'd sell the open of the next bar. The blue leads into the overbought again, you'd sell the open of the next bar. That would have stopped you out. In here, the blue leads into the oversold. This is the divergence, the space in between the black and the blue right here. The blue led into the overbought or the oversold. That's the divergence. So you'd buy the open of this bar. All right, right here, you'd buy the open of this bar. So going all the way over here, you'd sell the open of this bar, this one right here. Okay, right here, you'd buy the open of this bar, whatever that is. Right there, you'd buy the open of that bar. And that went enough up to get your stop to break even or take some profit. On this one, you'd sell the open of this bar. So without even looking at price, right? If we just put price like that, and we'll just move over here somewhere where we haven't looked at yet. And this is a market that I haven't even looked at yet. Okay, so right here, what you would do is buy the open of that bar. That's one. Sorry, I moved that over too much. Buy the open of that bar. And this one right here, you would buy the open of that bar. Oops, I didn't drop it. You'd buy the open of that bar. Back here, you would have bought the open of this bar. Right now, I don't know what price is doing. I don't know what kind of a trend we're in, up or down or anything like that. I just know that this is what the signals are given down here. All right, and this is the YM, which I haven't even looked at. You know, you would sell the open of this bar right here. You'd sell the open of that bar. You'd buy the open of this bar right here. All right, without even looking at price. You'd buy the open of this bar right here. So it would be right here, buying the open of that bar. And this one, selling the open of that bar. Do you see? Without even looking at price, you can tell what you should do. Oops, I think I went over too many. There it is. Without even looking at price, you can tell what you should do based upon what the oscillator is telling you. You have the separation. When the blue goes into the overbought or so, the blue leads by itself into the overbought or the oversold. You have divergence when that happens. All right? You have divergence when it leads by itself into the overbought or the oversold. You have divergence when that happens. And you can tell usually ahead of time when it's going to happen because you'll see it. Now let's bring price down and see how this did. Wow, price was way up there. That kind of stinks. Well, let's put lines on them here. And so that was a trade. We'll put it on the actual bar. Okay, that was a trade, that was a trade. 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 And that was a trade. Okay, so every one of these was a trade. And this one here, you would have bought the open of this bar. You would have bought the open of that bar. Okay, this one, you would have sold the open of this bar, which wouldn't have done, you would have been in this trade right here still, so it wouldn't have mattered. This one right here, why do I have a line on that one? It should be over one, like that. You would have bought the open of this bar right here. Okay, and this one right here, this should be over one too. You would have sold the open of this bar right here. And this one, I think that's on the right one. Yeah, that's on the right one. You would have bought the open of that bar. And right here, you would have bought the open of this bar. Right here, you would have bought the open. I think that's over one too many. No, that's right. You would have bought the open of this bar. So every one of those trades was a winning trade. Every one. And that right there, that period was from, what was that? That was 9:33 this morning to 9:47. So 15 minutes, you could have gotten your goals several times over right there. You see what I mean? And this is on the YM. I hadn't even looked at the YM. I hadn't even considered the YM. Let's look at something else. Look at soybeans. Oh, I ran over. I'm sorry, I ran over. Oh, I'll wrap it up here in just a minute. But I haven't looked at soybeans yet either. Okay. And I don't know what the best time frame is for soybeans. I don't think a 19 range would be best for soybeans because you get 1 or 2 trades a day, maybe. So we'll bump the soybeans down to like a 4 range. That's probably okay on the soybeans. Okay, we'll bump it down to a 4 range and see what it looks like. Let's go to the end because I have no idea. So right here, you would have bought, well, let's go here. You would have sold the open of this bar, sold the open of that bar. Now for soybeans, I don't know what you're going to do as far as the risk management stuff goes. It's a 4-tick range, so you probably move your stop to break even after a few ticks. And right here, you got a few ticks down. You would have sold the open of this bar right here for a few ticks down. And you would have sold the open of this bar. You would have sold the open of this bar. You would have bought the open of this bar right here. You would have bought the open of this bar. That would have stopped you out. You would have sold the open of this bar. That looks like a break even probably. You would have bought the open of this bar. Would have been a nice profit. This is soybeans. And you know, it's just random soybeans. We can look at crude oil. Not sure which contract is the leading one, so I just choose one. Will be the leading contract on crude, and we'll do that on the 7 range or a 9 range. Do it on 9 range. Okay. Same stuff, and I haven't looked at crude either. But right here, you would have sold the open of that bar. You would have sold the open of that bar. You would have bought the open of that bar, so that would have stopped you out. You would have sold the open of that bar. You would have sold the open of that bar. You would have sold the open of this bar. Right? These are 9-tick range bars, so every one of those sells is $100 in profit. Every one is $100 per contract. You would have bought the open of that bar. You would have bought the open of this bar. $100, $100 per contract. Okay, every time. That's 9 range. If I go to a 10 range, it'd be $100. It's $90. But you get the picture. No, crude oil is $10 a tick. Unless it changed, but it's always been $10 a tick. Oh, the soybeans. Yeah, the soybeans is $12.50 a tick. Yes, that is correct. The soybeans was $12.50 a tick. It still is $12.50 a tick, as far as I know. But you see, all this stuff, it doesn't matter what market you put it on. It's going to react the same way. It's just the oscillators are working on the math of the way that the market has worked. Okay, so you can just look at this without putting any indicators on the price at all. Just look at this, and you're able to take the trades. Again and again and again and again. And I just looked at like 5 of them right there, right in a row. 1, 2. That one would have stopped you out. 3 out of 4. 5, 6, 7. That would have stopped you out. 8, 9. Okay, so 7 out of 9 were winners right there. 2 stop outs and 7 wins out of 9 in that one period right there, from 10 to 11:30 on crude oil. All right, I ran over. I'm sorry about that. I got a ton of stuff I got to do. I don't know if you heard the voice in the background. It's moving day, and I got another meeting coming up here in 20 minutes. So if you guys have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for trial. Click on the purple button right there. That is going to bring you to this registration page. Sign up for your trial right here. Give us your TradingView login ID if you have it. All right. If you don't have a TradingView, go here to trading platforms and click on this link and get TradingView. All right. There's a free version, the basic version that is free. That will be enough so that you can use the 2 indicators that it allows you to use, I think, to do what you need to do. You got to get data somehow. If you have the free version and you have a brokerage account somewhere where you can transfer the data, that would be good, because you got to get data somehow. And if you have the free version, the data costs like $30 a month. However, if you click on the link, you click on this link. Do I have it? Yeah, right here. If you click on that link and you go to the monthly, you can actually get the essential for $15 a month, and you can pay for the data for $7 a month and get the essential with real-time data for $21, $22 after taxes. And you get everything. And you have 2 charts per tab. You get the technical alerts. You get custom range bars, because with the basic, you don't get custom range bars. So it's worth getting it. All right. And I mean, this is a single trade. That right there is a couple of ticks in a single trade. We'll pay for the fees to get the charts. All right. Well, that's all I got. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. It's just another trade right here. Right here. Bang.
Okay, recap of the morning session.
All right, so today it took, hang on, it took one trade in 5 minutes, 5 minutes in one trade to get to $1,560.
Good job.
All right.
All right, guys, we'll wrap it up with our good word for the day. The bottom line on money. Proverbs 13:7. There is one who makes himself rich, yet has nothing. The Bible says, there is one who makes himself rich, yet has nothing, and one who makes himself poor, yet has great riches. It's a blessing to have the things money can buy, as long as you don't lose sight of the things it can't buy. Money can buy whatever's for sale, but the greatest things in life, like your health and your relationships, can't be bought because they're not for sale. You could sum up much of what the Bible has to say about money with these 3 bottom line statements. Number 1, what you are is more crucial than what you have. Better is the poor who walks in his integrity than one perverse in his ways, though he be rich. Proverbs 28:6. Number 2, what God sees in you is more crucial than what you have. Proverbs 15:16 says, better is a little with the fear of the Lord than great treasure with trouble. And number 3, what others think of you is more crucial than what you have. Proverbs 22:1. A good name is to be chosen rather than great riches, loving favor rather than silver and gold. Don't worry about keeping up with the Joneses. The Joneses might be one step from bankruptcy or the divorce court. Furthermore, if you did catch up with the Joneses, they would just refinance. The truth is, you will never be happy with what you have until you learn to be happy with what others have that you don't have. The Bible tells us covetousness is a sin. And covetousness is simply failing to enjoy what God has given you. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.